Great to have you and see you in person. So there is some concern about your quarter was good, but the new numbers you gave around what you're seeing now. Why such a slowdown?
Great to be here. Thanks for having me. I think the incredibly strong quarter set us up for some serious expectations. And if you think about what we've had this quarter, we've had incredibly strong revenue growth, really strong EBITDA growth, back to 10%. And then we've had some softness in certain parts of the business. So our ads and leads business, very strong, back to growth after the rebrand from Angie's List to Angi. And we had some operational challenges in our services business, which definitely softened things a little bit in July.
Is this the roofing issue?
That's right. We had some softness in roofing, a challenging business that we bought about just over a year ago. We lapped that, and year over year, that business actually shrank. If you net out roofing from services, the services business by itself growing 34% year on year in July. So that delta from 34% down to where we are, really just a function of softness in our roofing business. Nothing serious, just operational challenges. We scored an own goal in ourselves. We'll figure it out over the next couple of quarters and get it back towards the 15 to 20% growth.
But what's happening? Because I did hear you on the conference call mention a slowdown in consumer discretionary spending. What are you seeing there?
So we're definitely seeing softness in consumer demand. But you got to remember, the way Angi makes money is pros pay us in our ads and leads business to advertise. So a really long order book where every single pro in America was booked out
they didn't have to advertise.
3 to 4 months. They didn't want to advertise during the pandemic. So we're seeing that business back to growth as we've kind of lapped some of that pandemic, and a more moderate relationship between supply and demand is actually what sets Angi up for success. So we're really happy with the ads and leads business, back into the high to mid single digits on growth rate, incredibly strong EBITDA margins in that business. So we're really set up for success with a more moderate relationship. We don't want services demand off the charts.
I remember talking to you in the depths of the pandemic when demand was off the charts for renovations of home, for handyman, for anything that people could do to fix their homes. How closely does that track the housing market now, which is seeing some real weakness?
We're definitely seeing weakness in what we would think of as discretionary tasks, particularly discretionary outdoors. So that's things like decking in particular will be a soft task right now. But you got to remember, 60% of our business is non-discretionary. Your toilet goes out, your electrical system goes out, particularly right now, your HVAC goes out. Those are things that are getting done no matter what. You may shift from replace to repair, which again is, potentially good for our business, but that overall demand, it's definitely down a little, but in tasks where you'd expect it to be down.
What about contractors? What do you see when we see turns in the economy, whether we're going into recession or not, as far as people who want to be working and join your platform?
So we look at this thing called active for match, which is when pros are going into the Angi app and they're saying, I'm available right now. So I want a new lead. I want to spend money to advertise on the platform. Year over year, about 3 months ago, we noticed active for match was tracking up. So that's pros saying, hey, I'm more available than this time last year. You may not feel it when you call a pro right now. You may still feel they're not available in terms of how they're negotiating. But certainly we look at the data and we see year over year active for match going up, 5-10% in certain categories, even more. The second thing we look at is their willingness to pay for leads. So their willingness to say, hey, actually, I've got 20, 30, 40% capacity across my labor pool. Every marginal lead, every incremental customer is worth so much more when you've got capacity. And we've seen their willingness to pay, to spend on advertising also go up significantly in the last quarter.